Thanks for joining me on this channel. If you're new here and you see me for the first time, welcome to the journey. I am what? Trader, drummer, and a mentor in the making, turning rhythm into energy and chart into profit, documenting purpose, passion, and self-mastery. Let's go. So in this video today, I'll be sharing with you support and resistance, how to draw support and resistance. This video will be more of for beginners and intermediate traders. Okay, so let me just go ahead and that is going to let you see very well. So first of all, let's do some what is it called now, some illustration. Let's do some drawings. Okay, so now you've heard the term support and resistance before. I bet this is not your first time you're hearing that. Okay, so what I'll be doing in this video is bringing things more clear to your notice. Okay, it's not that difficult as you think. I know some people will be so confused as of what it means or how to use it. It's very simple, and I'm going to be breaking it down for you. So right here now, well, let's take for example, you want to spot a trend. That's the most important thing. You want to spot a trend. And what is a trend? A trend is either bullish or bearish. Yes, that's what we call the market structure right now. So this is a bullish trend. You know what a bullish trend consists of, right? Higher highs, higher lows. And a bearish trend is lower lows and lower highs. So that is a bullish market, and this would be the bearish market. Oh, what was that, man? What was that for? Leave here. Oh, that's messed up. Okay, so let me take it off. Alright, I'll shift this one. Okay, so I can have space to draw the bearish side. Okay, I'll make it a bit small. Alright, so we have two markets right here. We have the bullish, the bearish. Okay, so now this is a bullish market, consists of higher highs, higher low, higher highs, higher low, higher highs, higher low. Okay, so a trend has been established, which is this one right here. Okay, so what you want to do now, support and resistance means passive buying. This is not levels where markets obviously reverse from, like creating a full market reversal. Full market reversal do occur from a key level, which comes either from weekly or the monthly or even daily levels. So they have intraday levels, and we have the long-term levels also. That is another whole story, another whole teaching. Okay, so but first of all, let me show you something right here. So you can see that this market had this impulsive move, and it couldn't go above here. Rather, it started retracing. This is your resistance here. That is the resistance. Same scenario here. Another impulsive move got here but couldn't break above. That is another resistance. Same scenario again. Here couldn't break above. That is what the resistance is. Passive. This is what I call passive selling that happen in a bullish market, because this is not the real trend of the market. The real trend is bullish. That is why you're seeing that every time the market goes up, it's very heavy compared to the pullbacks, which is the passive selling. So you don't expect a full reversal here. Swing trader will not sell position here and expecting to hold this trade for a long time. He knows that it's just maybe an intraday catch for him. Catch few pips and he will just be out of the market. Then reposition for a buy, going with the original trend. Alright, so this is passive here, passive selling. This is passive selling, passive selling. Also, you can see both profit taking happen here, because what you understand now is the psychology behind this move. Buyers bought from this base here. They ride this wave to this point. Then people that bought here started taking profit, of which if you buy a goose, just like the normal market of everyday living, you buy a goose at 20 naira, you wait when it gets to 15 naira, you sell and you make profit, right? That's what is happening on the chart here, because we are trading price movement. So They bought very low here. As the market came right here, they started taking profit. So buyers started taking profit and exiting their buys position, their buying positions, okay, which was entered from here, and they got here and they started exiting some of these positions. So the more buyers left their position, the more they closed their positions, the market started dropping. Then sellers, passive sellers, came in and they started pushing the market down. So as more buyers exit their position, the market started pulling back. Now bear in mind, there are some other buyers who didn't join, who didn't participate in this move. They are waiting for a best price, of which they don't want to buy high. Investors don't behave like that. They don't want to buy when the price is too high. They wait for it to drop. For example, if you're a Nigerian, the price of rice went up so badly, right? And when it was that high, people were not really buying because it was too high. But at the moment the price started dropping, people rushed in to buy because they know that the price might go up again. That's just human psychology. It's behavioral finance right here, guys. It's nothing more than that. So you want to buy when the price makes sense, and you want to sell when the price is too high. If the price is too high, expect a drop very soon. Okay, so we have this profit taking, passive selling, and we dropped. Then a new wave started again, another impulsive wave, breaking through that previous resistance, hitting a new high and pulling back. So this is the nature of the market. But the market will not present you a perfect picture like this. No, it won't. It won't present you any perfect picture like this. It will always give, noise from the candles, especially, which I will show you very soon. Because what happens is battle for control. So this one will say no, the price is too high. Elon Musk will say no, I'm putting billions here. I'm betting that it's going down, and he puts money. Warren Buffett will say I think it's going up. So those guys move the market, man. So, but I'm just saying hypothetically. I'm not saying that's what happened in most cases. Right? Hypothetically, I'm saying. Okay, so now that you understand how this works, all right, let's do the bearish side. Same thing here, but in this case, it's the flip. It's the opposite. So we have this impulsive move to the downside, creating a low here. I want to mark that as our support. All right. Another scenario happened here, breaking this low. That's what. So in a bullish market, resistance becomes support, and in a bearish market, support becomes resistance. Sorry, my hand keep moving this thing around. Okay. So what I was saying is this: in a bullish market, resistance becomes support. Right here, it got broken with this impulsive move. This was a resistance. Remember, passive selling, profit taking happened here, and it caused this pullback, right? So we marked it as a resistance, and now a new high has been created, pulling back, testing it as a new support because we're in a bullish market. Then another new resistance was created, passive selling, profit taking, and a pullback and an impulsive move. All right? Hope you're getting the gist, man. Consider subscribing to the channel and let's engage. I'll have my WhatsApp group link in the description, so do well to join my group. And I'll be dropping a lesson next week, full beginners course, part 1. So please do subscribe and follow. All right. So we'll have this last one here in the bearish market, like this. So you can see in this bearish market now, the support becomes resistance. It was broken, holding the market, passive buying and profit taking in this case now. Here it was passive selling, passive buying now. And then an impulsive move, breaking it, pull back, turning this support now into resistance because the market couldn't go above it again. It becomes a new resistance, a new ceiling. And then we have it just progressing that way. So it's very simple like this. Okay. So let's go to the charts originally. Okay. So I love to spot that from the daily. Now, what you want to understand, incorporating time frame is very important when you're dealing with this. Okay, it's very, very important. Time frame is very, very important. So I love to spot my support and resistance level on the daily. That's because I'm a swing trader. Okay, so you can spot it from anywhere, 1 hour, 4 hour, but the higher the time frame, the stronger the zone. Okay, and the lesser the fake out. So in this case now we have what? A bearish market flowing down the south. It's going south. So this is a lower low, lower high, lower low. Okay, let me demonstrate it. This is it. Okay. Clearly we're in a bearish market. Hitting a key level now. Okay. So what I want to do right now is this. Spot what? Support. Okay, sorry. Let me do something. So I want to mark this place out as a support for me. Okay, right here. And also right here. Okay. Oh, so remember, my daily is just for me to spot my levels. Okay, I'm not trading on the daily. I trade mostly on the 4 hour or 1 hour, but mostly it's the 4 hour. Okay, because I'm a swing trader. Again, I would like to emphasize on that so that we don't get confused. For day traders, their time frame is more smaller, like 15 minutes, 5 minutes, 1 hour, and all that. So, since I understand that we are in a bearish market right here, at the break of this, you can't spot the retest on the daily. You need to spot the retest either on the 4 hour. You spot it either on the 4 hour or the 1 hour. Okay, so let's look for that spot. Okay, so this is it right here. Take for example here, you could see a break and a retest just inside the zone, and we continue to drop. Same thing happened here also. Same thing happened here. Consolidated inside of it, and we broke through, and we kept moving for downward, going south, and then we hit this place again. What happened here? Passive buying and profit taking from the sellers right here, and we broke through, pull back in, continue. So it's as simple as this. My system is very, very simple. First, when I first started understanding the system, I thought it's very simple. Human being will like complex things. We feel if we don't put in the work, if it's not hard, it won't work. No, and that's why people fail a lot in trading, because trading is just the opposite of how the human being thinks. Okay, in life we don't like taking losses, but in this game losses are normal. Out of 100 trade, you can lose 20 and win 80. You are still profitable. Even if you lose 50, win 50, you are still profitable, because you have a risk to reward of like 1 to 2, 1 to 3. So, and please subscribe to the channel. I got so many juice coming out for you guys. All right. So that's it for the bearish side. Let's look for the bullish side, of course. Okay. So I'd like to use here. I'd like to use here. Where's that? Okay. Now good. I need a clear trend. Okay. I think we'll have one here, but it's very wide. So we have this move here. This is a resistance. Another resistance. And then we are close to the key level here, which is the reversal. That's why I didn't hold it here, because we already hit a key level, so the reversal is already in place right there. Okay, so you could see the market did what? An impulsive move here, passive selling and profit taking, pulled back, an impulsive break, then passive selling and profit taking, came back to that zone, and a new high, a pullback. All right. So here we made this resistance here. Okay. So what? Passive selling, profit taking. Then finally, why we could not make a new high again was we already hit a key. So I said this in my last video. The market will keep trending upward until it hit a key level. In one of the books I read, I think it's by Adam Grant, he said the market will always continue to be guilty in a bearish market until it's proven to be innocent. And the market will be innocent until it's proven to be guilty in a bullish market. So in this case, it proves to be innocent until it was proven to now be proven to be guilty right here on this key level, and massive fall. All right. So that's how it is. That's how it works, man. That's all about support and resistance. It's this simple. So you just go ahead, test it, back test it, just practice and gain mastery over it. And I'll catch you in the next video. Please subscribe and share, like, comment, and let me know what your thought is. So please do take care of yourself and peace out, man. Thank you.